I'm joined today by Kenichi Amaki, Portfolio Manager at Matthews Asia, and he's going to tell us a little bit more about Matthews Asia and how they run money. Kenichi, thank you very much for joining us.
Hey, no problem. Matthews is a Asia-focused investment house. We're based in San Francisco, and there's really two pillars that are very important for us in how we approach our investments. The first part is be long-term investors. Asia is an area where we see long-term improvements in productivity. Wages are growing, household incomes are rising, the middle class is expanding. So we really want to ride on that wave. And we think that investors will benefit the most if they stay invested for the long term. So really have a long-term investment horizon. If you stretch that horizon over 3 to 5 years, that you can benefit from the returns or the growth of Asia. The second pillar is to focus on domestic and regionally oriented growth. So those companies that are tied in with the growth of the household sector in either the domestic or regional markets of Asia will see the fastest growth. Asia is not a story about cheap labor and selling cheap export products to the developed markets anymore. It's about growing consumption, growing incomes in the region, and we really want to be focused on owning the companies that are riding that wave and will benefit over time. So those are the two important pillars for our investment process.
And where are you finding your best opportunities in Asia at the moment?
I think the best opportunities in Asia right now are in the China market. A lot's been said about China and how their headline GDP growth is slowing down, but I think it's really important to look under the hood and realize that what's changing is the composition of growth. And it's moving from a more speculative, investment-driven growth to a more sustainable, consumption-driven growth. We have consumption in China about 40% of GDP, and in other developed markets, it's a lot bigger. And by moving towards that direction, it'll be a much more sustainable, more stable growth. But we're going to see headline GDP growth in China slow down. No doubt about that. But the quality of that growth will improve a lot more.
And as a company, Matthews only focuses on Asia, doesn't it? Do you think that gives you a competitive advantage against some of the other fund managers in the region?
Yeah. We don't look at Asia as something that comes and goes. It's not a fashion for us. We're really always concentrated and focused on finding the investment opportunities in Asia. And, I think global investors, they sometimes think of Asia as a niche or exotic. But Asia is home to half of the world's population. It's about 30% or more of its GDP. You've got the third largest economies there. Asia is not a niche. It's not an exotic site. It is where consumption is going to happen 10, 20 years down the line. So I think for Matthews being really focused on that region for the long term, it really gives us a benefit or an edge compared to our peers.
Kenichi, thank you very much for joining us.